guys, stop loss cluster update for Wednesday the 23rd of March. We've got the UK inflation data in 4 minutes, so this is going to bounce around quite a bit. The SLC above 1.33, so 23 pips away. One below is 132.30. We are currently a buy, and we definitely sold. The retail guys certainly sold it since yesterday's update. So there's that big move. So I don't know whether or not that move's been. It's a 185 pip move since they started to sell it. So we could maybe argue that might be the move. If they continue to sell it, we'll continue higher. We do have some resistance overhead, which you can see here. There's a candle wick and monthly pivot resistance. So you've got some supply there. So yeah, we've got that data. So it's probably going to bounce around a bit, but you've got the stop loss clusters, and it should be a buy dynamically as well. And we look at the bubbles. Let's bring that across. Go to average bubbles. Let's get rid of that for a sec. So they're short in the pound basket, not just pound USD, but pound against everything, and they're also long dollar and Swiss. But that's changed actually. Yen is still being dumped on, and maybe they're going to get stopped out, or they're going to add to that bias. If they continue to buy yen, it's going to fall, and we're going to continue higher on cross yen. So that's the way it works. You know, they need to exit that bias in order for this to move. If they add to that bias, it's going to fall. So yeah, it's going to be a tricky day today because the pound's the only strong buy. And if the UK inflation data is not as, if it's worse than expected or whatever, then this is going to just bounce around, and it's going to be a bit unreliable. So the only thing that's a strong buy is an unreliable pound. But there's lots of strong sells. Okay, so we've got to be careful. Just go through some charts. Do GU, we'll do EU, so it's popular. And where are we? God, EU. And they sold it, but not as heavily as pound. One above, 110.45. One below is 1.1. Yeah, exactly on the dot. They're not using their imagination for their stop loss cluster placement. It's dead on the round number. There's MS1 at 110.52. So maybe that could be a good support. It's monthly support. Let's get rid of that line. We are sell at the high level, but it went sideways there. AU. Try and make it a quick one. AU. So the one below is the largest stop loss cluster. So all these stops need to be taken out. The one above is sticking out like a sore thumb. See this here? It's 74.90. The one below is 74.25, so we're aiming for that liquidity. We went and grabbed the stop loss cluster above quite strongly. See those blue lines? So we took that liquidity on the way up, so I think we're going to take it on the way down, and then we could potentially bounce off that liquidity. So that's just the way it is. It's pretty horrendous. MR2 there, 74.4. We are a buy. And they sold it here. They crossed the 50% line around about here. What else should we look at? Do dollar yen. This is causing a lot of grief. And the one above is 121.45, if I remember. Okay, it's not letting me load it. One below 120.75, 121.40. So they brought the stops a little bit closer. And inevitably, I think we're going to have to get that stop loss cluster with too much of a strong buy on the sentiment. They crossed the 50% line a long time ago. Here, at 114. Yeah, we haven't actually we're not actually crossed the 50% line in ages. There you go. Yeah, you can even argue there it didn't really cross. It got very, very close, 49%. And so they've been really, really bearish UJ for a long, long time. For 3 months. And so what happens if they're bearish? We're going to come up. So there's that analysis that I was saying how we're going to potentially be a buy, and that was their break even. and that was like a fake out move there. So then we just rallied like crazy. So that's that. And maybe AJ, because you know we rallied 2% yesterday. It's pretty bonkers, but at least you know the reason for it is the sentiment. 90, 80 and 90, and we are a strong buy here, and they sold it. Oh, they did cross the 50% line, unlike UJ. Yeah, there, or nearly there actually, but we teetered. So yeah, very bonkers price action. So unless you're careful, you're going to blow your account. So you need to know your stop. It's really important that you're using risk management. If you were quite lazy and you thought, well, this is going to come down, and eventually, I mean, it will eventually, but can your account sustain a 2% movement on a daily basis? No, not even on a micro lot. You're going to possibly blow your account. So you have to use your risk management. There's MR3 here. We've really exceeded monthly range 3 by 300 pips. That's probably the most overextended move I've ever seen. So you have to use risk management. If you don't, then it's inevitable that you're going to do damage to your account basically. So know your exit. What I recommend that you do, you probably like look to a small time frame and then know your exit, and then you enter, and then you should be okay. Obviously you look at a big time frame for bias, you know, H4, D1, and then you go into a really small time frame for entry, because you need to know where your exit is and be wrong quickly as well. It's really important. So the daily chart is just ridiculous. And there's some supply up here which is interesting. Where does that come from? It's saying here, I can't zoom out anymore, maybe weekly, but yeah, anyway, I'll make it a quick one, and we'll see what happens today. Right, okay. From that candle wick here it's saying from 2015, November 2015, that's what it's saying, and 90.72. So that might be a good resistance. It's hard to say, and if that one breaks, we'll come up here, 95.82. So keep an eye on 90.72. And remember to zoom out to a big time frame for good analysis, and a small time frame for entry. And that's it. So I'll be back tomorrow. Have a good day, and I'll update you guys about the S&P as well. And that's what I'm going to stick to. It's been quite easy, and as long as you're making money, that's all that matters. So be careful, and you should be fine. And risk management is obviously the key.